what's good, everybody? Welcome to the Closing Beat. Happy Monday. Hope you had a great long weekend. We took Friday off here. Actually went to Orlando, did touristy things with the family. Got to fly helicopters over Disney and did this swing like chair thing. You like get in a little chair with these tiny little chains attached to it, and you swing above the. I won't be doing that again, so never mind. Anyways, hey, markets today, we got a down day. The markets can fall. Did you know that the markets were able to fall? How interesting. So look, a little bit of a pullback today. We're going to review all of this for our customers on Thursday. It's the one time a year I really do an in-depth sort of overview of the markets, where we're at, what to expect, what going forward. Every data point imaginable. I'll try to make it quick, but it's going to be extremely detailed, not only about the market review, but also with the portfolios and the changes that we had there. As far as the markets go today, you've got the chart down to your bottom right where you can actually see the performance minute by minute and see kind of how things went. We had some trade news that came out overnight. The markets were actually sharply higher overnight, about 150 points on the Dow, at least last I checked late last night. And so this goes back to the concept of the trade deal being baked into prices. So we'll cover that as we go. You had some negative economic news that came out today. Construction spending drop. We're going to cover a lot of that on Thursday as far as home prices, home sales, new home starts, all that stuff to kind of give more context to it. But after that construction number came out, you can actually see it right there just after 10 o'clock. The market started drifting lower. People thinking, well, hey, if the trade deal's baked in, everything's going to be good. We'll see, by the way. But people thinking, hey, I'll just go ahead and take my profits now in the short term. And so is this the beginning of a downturn or a pullback here? That's tough to say, really. If you'd asked me this around 11 o'clock today, I would have said, yeah, here we go. This is the start. This is that selling pressure you want to see. But if you notice on that chart off to the right, and I'll show another one in a moment, you saw buyers come in and say, hey, that little tiny pullback was already enough to get people interested in buying. So we'll see. I think we need a little more information. I think it'd be totally healthy if the markets pulled back. So no problem there. And like I mentioned, I always tell you ahead of time instead of saying, I told you so. I hate that. The markets will be more active in March. I pointed that out last week, that February, we kind of overviewed that early in the month. March will be more active, and this is the start of it already. So you kind of expect wider ranges as we saw today. And of course, we'll cover it as things happen. Hey, here's the markets. This is the S&P 500 on the screen today, back above the 200-day moving average. Our issue really, and I'm just going to, I played around here, so my lines are a little, I didn't have the same lines there, but you can see the same sort of overhead resistance area for the S&P 500 in the short term, going to act as a sticking point. Now, if tomorrow they say the trade deal has been solved and China's going to do everything we asked and we're going to do things that they want, and it's just, wow, we're all happy and working together, then I think you see the gap or the move higher above this resistance. For now, there's no reason to expect the trade deal tomorrow. I think the projections were at the end of the month, actually, for them to come up with something. It's going to depend on the context of it. The market has already sort of hinted and shown that it's got to be substantial and sort of substantive of what's going to be inside of this deal. It can't just be that, oh, they're going to buy a few more soybeans and it's just going to be great. After all this buildup, it's got to be a good one. So from a technical perspective, you got a little bit of resistance here in the short term. Nobody's complaining, and I think it'd be healthy if we pulled back. The Nasdaq there, same thing, started the morning by selling off, came back to the 200 as you can see there, and was able to kind of finish not too bad on the day, really, in my opinion there. The Russell 2000 was the real focus right at the 200-day moving average. This is doing exactly what the Nasdaq did, where it sort of wasn't able to make up its mind whether it was going to be above or below. The technical traders, of course, using that as resistance, hoping for a pullback, but the bulls just ever so strong couldn't and still can't manage to pull this thing back. Volatility was higher by about 7.5%. That'll be up top off to the right if you want to check that out. I thought that was interesting, a little tiny bit more of a spike there. We're seeing on some days where the markets are positive by just a few points, volatility still spiking higher. Now that could be the seasonality sort of adjustment from February into March and April. If you're not familiar, March and April tend to be very active months, positive months, by the way, but very active months. And so that could be the seasonality of that coming into play, where volatility is a little more wide-ranging. But it could also be a little sign to let people know that there's more and more bets on people, or hedges of people that want to protect on the downside should there be any sort of pullback. If you don't know what I just said, totally cool. I don't cover VIX a whole lot. It's a very, very in-depth thing, product, and there's so many variables. So one day, maybe we can, if there's nothing going on sometime, we'll just make the whole thing about the VIX futures, how it all works. I love talking about it. It's just, you can't just sort of skim over it. It's a very detailed one. Okay, oil. So back towards highs for oil today. Not quite there, but you can see now on the charts. Why don't we just go ahead and make sort of this very, very obvious. There you go, about $58 a barrel, the new resistance area. So we were talking about $54 a barrel going back about a month and a half now, being the comfort zone. I was hesitant to say resistance there. I've been saying comfort zone for crude oil. Now we've moved up to 58, and it's sort of like the next step. You're walking up a bunch of steps, you have some trouble for a while, and then you take that next giant step. That's where we're at. $58 is the next resistance area. Got crude oil numbers coming out on Wednesday. Remember the surprise last week? We were expecting another over sort of shoot in the stockpiles, the oil stockpiles there here in the States, and we actually had quite a significant drawdown. If that continues into this week, in addition to Venezuelan sanctions, Iranian sanctions, OPEC cutting back, in particular Saudi Arabia cutting back more than expected, if that happens, you do have sort of a catalyst for a new push higher there in oil. Sector-wise, you got, I'm going to use, let's use XLV today. So this is a healthcare ETF, sort of broad-based in the bigger names here, but XLV is the ETF we'll use to illustrate a lot of the healthcare stocks. If you were to sort an S&P 500 list today, and it's just sort of by negative, you're going to notice that there's a lot of negative. A lot of the ones towards the bottom of the list are going to be healthcare related. WellCare, Anthem, Humana. I'm just going to breeze through them real quick for you. United Healthcare, Cardinal Healthcare, CVS we'll throw in there. Oh, whoa. CVS breaking down to new lows, really extended in the short term. Cigna near the bottom of the list. You can go into some of the other, you can stretch out from that a little bit, like with McKesson. Also pulling back, lots of pullbacks here in healthcare in the short term. And remember, healthcare had been a leader. So if you follow, for example, the XLV, healthcare had been a leader. It held in there the longest. Remember when the markets sold off all through December? You had home builders pulling lower, tech and everything, but healthcare sort of held in till the last possible moment. And then December, everything fell. So that's a little sort of chink in the armor, or however you say it, a little weakness there, and noticing that it's broad-based. It's not that just one stock had a bad day and it's heavily weighted in the sector. It's that the XLV, the healthcare stocks in general, broad-based sell-off there, a lot of profit taking in the short term. So speaking of home builders, not bad today. So home builders were up over 1%. A little of that weakness throughout the day did weigh on the home builders. I'm going to cover this one a lot on Thursday with customers, just because this one's important. So home builders led us lower. Look over here. If you're not familiar with candlestick charts, you can still see the red and the downward motion. So we all understand that that's a sell-off. And notice that it started back in September. Well, the markets didn't really, I can't do it quick enough, but notice that the markets didn't really start selling off until we got into October, and that was just this first little sort of first wave, the first punch that the markets gave, and then chopped sideways. Home builders, meanwhile, were pulling. I remember commenting on this string of down days here, just incredible how extended it got. Well, now, on the upside, it's sort of leading the way. I'm not going to call it a leader, but it's sort of leading the way, and the main takeaway from all of this is, hey, we've come back to where we started, just about, very, very close. We've come all the way back. So after all that drama, all that pullback, all that higher interest rates, oh my God, the Fed's going to kill the housing market, nobody's buying homes, home prices are selling off, new construction's weak, and all of that guesswork behind that. Well, maybe people aren't buying homes because it's snowing outside and they wouldn't go buy a home. We can put all that behind us and now look at this and say, we're back to where we started. Now we can go through each individual home builder. You can look at the sector and you can sort of analyze it for what it is. What's the performance of the individual stocks? We've got a flat Fed, meaning by flat, I mean there's no projection to raise rates. At least that's the language they're giving right now. And so when you look at names like Pulte Homes, Nice day. It's trying to get something started near the top of the performance list for the S&P 500. Dr. Horton, it's Dr. Horton, I call it Dr. Horton, up 3% today, trying to continue this little uptrend here and show that there are that it can still get something done. Also near the top of the S&P 500 list. So just want to point home builders out as broad-based. Nice little rally today. Let's just check since I'm sort of interested now. KB Homes, 2%, same thing. So again, you go, well, what's up with home builders today? Just a broad-based rally there. It's not that one stock was in the news and we're missing the news and something. So it's kind of important to see that. We talk about consumer staples. Consumer staples, when they have a really strong move, the first thing I do is I'll look at a couple of the bigger names, Pepsi, Coke, and such, to see did something happen there. If it's oil service related, there's two names, Schlumberger and Halliburton. You always go right there and you go, did something happen there? Otherwise, we can start to see if it's a broad-based rally. Okay, individual stock news here, if I haven't lost you yet. You've got Tesla. Tesla lower a little bit today. This is sort of unfortunate. There's a lot of news going on here. The Model Y, the SUV, coming out here March 14th, so not 10 more days to go. That one's coming out. It's going to be a little more expensive, have a shorter range. A lot of investors, you think that'd be positive, but if you look at the stock price a little lower today, people go, wait a minute, we've heard this before. There were other models that were supposed to, the Roadster, all these things were supposed to be hitting the markets. They did not. There's 10 days. Now, this isn't a projection. This is 10 days from now, he will unveil it. So I think this one is happening. Investors probably believe that as well because the stock price was lower on the day. Why would it be lower? Why wouldn't it be a positive thing? And if you think about it, you've got the Model 3. You now have a cheaper Model 3 coming out. That should be the focus. It's very hard for a company, take a look at Ford. It's very hard for a company to put so much emphasis on one product and then dangle the carrot over here and go, look what's going on over here. There all of a sudden becomes this question of costs. What sort of production capabilities do they have? I don't think they have any, by the way. So I'm not sure how that's going to happen. But anyways, you get a lot of sort of confusion. And what do I always say? Traders don't like confusion. They don't like drama. They don't like when there's sort of uncertainty. And I think Tesla did a good job of coming up with uncertainty today. Unfortunately, it drew from what they did on Friday. Friday, late in the day, after the market closed. Remember, they had about a total of $1 billion in a convertible bond that was coming due. And everybody was like, oh my God, what are they going to do? Paid it in cash. Showed up with the checkbook, paid everybody back in cash. That should have been the focus today. That should have been the excitement. I think a bit of a misstep there to try to distract. I don't know. What do I know? I do know that Amazon was higher today, 1.5% on the day. They got an upgrade. So analyst from Evercore, very popular, very successful analyst, by the way, puts a $1,965 price target. What I'd love to do is eventually just start drawing and putting like Evercore. I'd love to just type it there and like we could just come back and see what's going on. Anyways, put that price target on there. They basically said that additional businesses, the additional efforts the company's working on, that you're going to see gross profit grow faster than overall revenue, at least for the next 3 years. And hey, who doesn't like to hear that? So that analyst obviously had a lot more to say. That's sort of the gist of what he said today. 1965 for a price target. He was previously at 1800, so it's a pretty sizable jump. Look, he was here at 1800, and he thinks that we're getting back closer to new highs. So we'll see what happens. AT&T shares down by almost 3% on the day. So, they own CNN now. So any CNN fans out there, you're basically owned by AT&T at this point because when they acquired Time Warner. Anyways, AT&T says they're looking to shake some things up with the executive ranks there, sort of change how they're doing things. The comment was actually that CNN was not reaching its potential. So without getting into politics, it sure looks like they want to change things up. I know from an advertising perspective, if you are a small business and you want to advertise on CNN in your local area, for some reason you take all the politics out and you go, look, I'm just a business, just trying to advertise here, $1 to air a commercial. That's how much we paid. $1 to air my pretty face on CNN. Not like, oh, it's in the middle of the day, nobody's watching. All of the major time slots there. $1. $1. I think $4 was the most we paid during the election, which was when this whole thing was. Anyways, so just thought that was interesting. We'll see. Maybe CNN can do something there. Kraft Heinz, stock higher by about 2.5% on the day, upgraded by Morgan Stanley. Morgan Stanley said, hey, look, we get it. The stock price has sold off. It is taken quite a big beating, down 50% in the last 12 months. But they said, the earnings, the dividend cuts, those projections, the negative sort of news that came out during the earnings there, all that's been priced into the stock. And they think that that this is your area. They didn't say specifically buy. They didn't upgrade it to a buy. They just said this is the area here. So Kraft Heinz attracting a little attention from the bottom pickers. Of course, who doesn't like to get a good discount there? Salesforce.com a little bit lower today, and who may have known ahead of the earnings? Isn't that interesting? So the stock down about 3.5% on the day. It's down a little bit lower. I think another 3% after the close. Oh, a little bit more. Oh, getting there. About 153, 152.5, right in this area is where it's trading after the close. All on earnings. So they beat nicely on earnings, right? Salesforce did a great job there. Revenue they beat on. Everything from this negative, this sort of downturn from the earnings is all from guidance. So I'm showing you got guidance of only 60 cents a share, 60 to 61 cents a share. We're expecting 63. Not a big miss, but when you have a stock that's, this is a fairly expensive stock, not dollar-wise, but valuation-wise. It's a fairly expensive stock. So if you get any sort of little sign of weakness, you get to move lower. Now, the CEO of this company is incredible. He's a cool guy. He's going to be all over the media. And historically, when you see this stock gap lower immediately after earnings, his comments have had the ability to bring things back into the positive. We'll see. I just think that's kind of interesting. Let's go through a couple other things. Children's Place down to new lows, down 10% on the day. Weak earnings, just overall weak. They're going to buy Gymboree and Crazy 8's intellectual property. That's a tough business there. I stay positive. Oh, Lyft. I started typing Lyft. Lyft, I'll move on. So Lyft is, they're going to do the dual class IPO structure. Agree with it or disagree with it. It's something that happens. If you want to invest in the company, you're going to invest in it anyways. It's just know that you will not have any voting rights. It's sort of a hot topic right now in the IPO world, where you basically have companies. If you're not familiar with what I'm talking about, I'll just take a second on this one. If you're not familiar, Lyft is going to go public. They're going to offer their shares to the public. However, they stuck in a little thing there to say, we're going to keep the shares that really matter as far as running the company and controlling the decision-making here, but we're going to offer price appreciation shares to the general public. All that means is that they're saying you can buy shares, and if they appreciate, you can sell them and take a profit, but you can't tell us what to do as far as the company goes. Facebook did it. Under Armour does it. That's why if you ever look up Under Armour, you've got UA and I believe UAA or something like that, two different classes of stock. You've got Google or Alphabet did the same thing. Snapchat did the same thing. So it's becoming more popular, and people are kind of like, hey, dude, that's not fair. You really shouldn't do it that way. Doesn't matter. Lyft's going to do it anyways. They also release their financials. So you definitely want to look at that if you're considering investing in it. Let's go to Alibaba. Had a good day today. If you don't know who Alibaba is, you probably should look it up. They're getting back to even. So for the last 12 months, the stock's been in a sort of negative position here. If we go back, or if we look at what today's performance was, that brings them back to flat. So for a year's period, they're basically flat. The stock's doing really good. It's up 35% so far this year. And so just thought we'd point that out. And what else? Oh, Southwest Airlines. If you like Southwest Airlines or you want to go to Hawaii, we talked about this the other day. They're going to be flying to Hawaii now. They announced today $49 to fly from California to Hawaii each way, and $29 if you want to island hop down. If you're already down there and you want to go from island to island, $29. You would think, oh, that's great news. Did take a little bit of a hit to Hawaiian Airlines naturally. So Hawaiian Airlines down about 11% on that competition there. And that's all I got. Tomorrow is going to be retail-based earnings here. Let's see. You've got Kohl's reporting earnings, Target reporting earnings, Ross Stores, and Urban Outfitters. Weibo, interestingly, if you like, I don't know if I say that right, but Weibo if you like Chinese stocks, they'll be reporting earnings as well. It could bring a little attention to Alibaba and JD and the like, the bigger name Chinese stocks. So Trump, Army of Kentucky, can't post. That's probably a good thing, I would say. Yeah, so in Thursday's update, by the way, for customers, I'm going to go over China. China's on fire. China's back in a bull market, by the way. And if you look at the details of the average bull market, I'm going to go over all this for customers. The average bull market for, as far as performance goes for China, there are another 90 percentage points that we could go in the Chinese Shanghai market before even getting back to average as far as gains go. So we're going to cover that for sure. There's a lot of detail there that maybe will be helpful. But you're right. Yeah, Chinese stocks, Chinese markets have bounced right off this sort of lower end trend line there as a broad-based Shanghai market really well. Yep. We're also going to cover some politics too on Thursday. I don't mean to tease it too much. There you go. So what do you think about stamps? You mean stamps.com? So stamps.com loses the U.S. Postal Service as for their partnership there. That has a massive reset. Plain and simple. That stock's going to reset. You're going to have to find value in that company in different ways. I haven't looked into it that much to say here's what I think it would be, but that's intense. David, yes, updates on, not all of them, by the way, David, not all of them. A couple rebalances. I'm going to cover all of them, actually, in the class this Thursday. So it's good timing. It's sort of our once-a-year major update, aside from the normal rebalances. You got it, sir. Perfect. Cisco, yeah, same thing. Little extended here in the short term. If that pulls back with the other tech stocks, I'd have no problem with that. If you're looking for more of a longer-term investment, don't you kind of hope that there's some serious pullback in the markets, or at least these tech names, before 5G really becomes something? Meaning, you go ask anybody on the street and you go, hey, what do you think about 5G? They don't know, right? It's not widely known yet. Wouldn't you like to see like a real quick pullback on that? I don't know. Sometimes I just dream about stuff. Hawaiian Airlines, yes, or Hawaiian Holdings, yes, sir. Lower because of Southwest. We covered that one for sure. What's the difference between a broker's license and a financial advisor? There's no such thing as a financial advisor license, really. So you're talking about registered investment advisor would be on the license side of things. The difference is from a brokerage standpoint. I used to have that license, so I'd be able to pick up the phone, talk with you. You'd be able to say, I want to buy into some stock. I'd essentially be able to manually make transactions in your account, whether they were positions I owned or anybody owned. Financial advisors typically land on the advice side, and they don't actually usually directly manage their own customers' accounts. They may buy mutual funds or whatever, but it's a whole different animal there. It's also a different regulatory body as well. So without grabbing the book, there is a significant difference. If you're thinking about being one or the other, you definitely want to understand the differences. The broker side of things is really sort of fading away, if that helps you, Danny. So it should point you towards the advisor side. There's also a lot more flexibility on the advisor side now than there used to be. So as an industry, most guys are moving from the brokerage side to the advisor side. Hope that helps. I hope that helps. Investing in startups. For me, if you're talking about when they go public, now if you're talking about on a secondary market, that's a different story, JP. But as far as a company going public, for example, like Lyft, I would not consider investing, me personally, I would not invest in the company until they have at least 200 days of operating pricing, meaning I want to see the chart move for 200 days before I dive in. I have done numerous studies on investing in IPOs. It is very, very rare that you miss anything. You do. I mean, there's always the outliers that just take off and they never come back. But it's very rare that you miss anything by waiting. By chasing in the first little bit there, I've seen no good reason why, to be honest. David, yeah, you're going to have a decent. Hopefully you can copy and paste. I'm sorry, David. You're going to have a handful. We had a lot of adjustments. Yeah. Thank God we don't do that all the time, right? Did stamps go to Amazon? No, I don't think so. I think maybe they have products that are involved in that. No, I think I will have to look at that more. That's okay, Danny. Yeah, I mean, you can have the brokerage license, Danny. It tends to be that they have something to sell. And there's nothing wrong with somebody that has something to sell, by the way. If you are a Series 7 side of things and you're working as an advisor, nothing wrong with that. But that person typically has their own products that they want to kind of sell and would make their money that way. I did a video on it just to break it down. So nothing wrong with either way, just there's a big difference. You make too much for a Roth IRA and you're not that fond of the 401k Roth, you don't have to contribute directly to a Roth IRA to get money into a Roth IRA. So if you make too much, something I can help you with, it's called a backdoor Roth IRA. There's other ways to go about it as well. It just means a little more paperwork for the person helping you doing it or the brokerage firm that you use. It's really not that bad. Not that bad at all. Light guidance on CRM, at least so far, and billing. I think billing was just a touch light on CRM, AKS, if that helps you. I would pay attention to what the CEO has to say. Whenever he talks. It's probably going on right now, to be honest with you. Okay, that's all I have for you. That's a great Monday. Hope you enjoyed. We'll be back tomorrow to do this all over again. How about that quality? Is it better? Come on now. It's like a lot better. Somebody give me some. I've been working hard to make this quality good. Anyways, enjoy the rest of your day, and we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.